Adam Gower here, and welcome to the Gower Crowd podcast syndication in the digital age, where we examine all aspects of raising capital online for commercial real estate. And my guest today is a very interesting fellow from whom you are going to learn a lot about how integrity and authenticity can drive extraordinary results in real estate crowdfunding. Sasha Cucuz is CEO of Greybrook Securities and partner at Greybrook Capital. Now, Greybrook is a capital aggregator. That means that they raise money from investors and then invest that capital in deals that other sponsors put together. A bit like a private equity shop that crowdfunds their capital instead of relying on institutional capital. Check out these stats. Greybrook have invested in 80 projects occupying 39 million square feet of projected density, 27,000 residential units with $17 billion worth of projected gross development value at time of inception. That is a lot of real estate. What I find particularly fascinating about Sasha's perspective is that the case he makes for acting as essentially what is an intermediary between the investor and the sponsor is very compelling. For an investor looking to invest in real estate, you have a few choices, right? You can buy and manage directly, invest with a sponsor directly, invest via a crowdfunding platform in a sponsor, invest in a fund, or invest in a company like Greybrook who represents your interests with a sponsor. That's an interesting structure and one that is not uncommon. In fact, we've actually had clients who fit this mold, but none of them of the same scale as Greybrook. That said, no matter how you decide to raise and deploy equity capital, either as a sponsor, crowdfunded platform, as an aggregator like Greybrook, nothing works unless you have a robust educational website that effectively broadcasts your messaging on the World Wide Web. So you can attract prospects, draw them into your orbit, and educate them to invest with you. And yes, you guessed it, you need to look no further than the gowercrowd.com website, where you will find masses of resources. So you can learn exactly how to build investor acquisition systems yourself that will bring you investors predictably and consistently for years to come. So go ahead, go to gowercrowd.com, sign up for the newsletter. I'll send you some information on how you can do that. And also go to the podcast page for today's episode, where you'll find links to Sasha and to Greybrook. Now, without further ado, my great pleasure to introduce you to Sasha Cucuz, CEO Greybrook Securities and partner at Greybrook Capital. Sasha, thank you so very much for being on my podcast. It's a real pleasure to meet you. And you guys are at Greybrook ginormous, huge institutional players as far as your scale is concerned. And yet you raise money from individual high net worth institution investors. Tell me why. Why don't you just raise money from institutions?
It's a great question. So first of all, thanks for having me. It's a pretty simple thing, really. You know, the way we look at the world is individuals are really they're people. They save. They're building for their retirements. They're looking at things on a very long-term basis, and that's something in real estate that's a very important consideration, because real estate is not a short-term type of investment. So our philosophy is, if we pick a strategy that's a great strategy and we focus on individual investors who are looking with a long-term investment horizon, we tend to have an alignment from a philosophical perspective. When it comes to institutions, you know, you're dealing with a company that has somebody, you know, managing the money, and maybe they stay there for 10 years, maybe they are there for 2 years and they leave and somebody else comes in. We like dealing with individuals because we can build relationships with those folks. And if we take our time at the beginning to understand what their investment objectives are and ultimately what they want from their investments over time, we think we can create a great alignment. So we like to focus in that area.
So that's a very interesting distinction that you make, that because you're a long-term real estate investor, retail, or let's say individual investors, are more inclined, or you have a closer bond to them. What's interesting about that to me is, because I've always thought it's the exact opposite, actually, that it's institutional capital that is looking for, you know, insurance premiums today so they can pay out in 30 years. Whereas retail investors, if you'll allow me to use that term, high net worth individuals, they want capital gain. They want income today. And I know you do a lot of ground up. They want income today in terms of preferred returns or some kind of dividend. And they want to know that in 3 to 5 years, they're going to get that money back in case they need it for some other point. So tell me more about what long-term means and address that contrast, if you like.
So your general perception on how the differences between the two is very accurate. I think generally speaking, an insurance company, a pension fund, what we call permanent capital sources in our universe, they are very long-term oriented, and probably more so than an individual. I think what I'm referring to more than anything is that when you're building a relationship with an individual, not to say that their objectives can't change, not to say that their life circumstances don't change, but generally they're investing today so that one day they can retire, whether that's 10 years down the road, 20 years down the road, 30 years down the road, and they're willing to, in a good strategy, kind of stay the course if they trust you and if you've done a good job for them. A lot of these institutions, some of them obviously have very long-term permanent strategies, but they also are more prone to reallocating, rebalancing. One day they're looking for development, the next day they're looking for something different as they round out their overall portfolios. So it's a little bit less about the nature of the length of the investment and more so around how one manages their investment. I always make the joke internally that nobody's waking up in the morning thinking about their asset allocation. Well, that's what a pension fund manager does pretty much every day. And then they'll spend all day with their team talking about their allocation and what they need to do to tweak it. And it's first top of mind. Whereas for the individual investor, it's more of a byproduct. They have a day job, they go to work. They don't want to worry about these type of things. They allow us to worry about these type of things for them. And I think that it just fits with the infrastructure that we built, which is maybe a different point of discussion, but we set out in the early days to build an infrastructure, a team of people that can deal with individuals rather than institutions. And we have institutional capital, so we have a group that deals with that capital, but it's a completely separate group, a completely separate requirement that deals with our individual investors.
Yeah, that's really interesting, actually. So Darcy was telling me about that. You have a whole team of people, don't you, that communicate directly with high net worth individuals. So tell me something, if you would, Sasha, about the investor journey from somebody perhaps who's listening to this podcast that's never heard of Greybrook before. What's the pathway that they will go through in your system?
Sure. So once they meet, once they reach out to us, whether that be through digital means, whether they pick up the phone, we like to think of ourselves as having multiple ways to learn about us. But once they get a hold of somebody at Greybrook, the journey really begins with understanding the company first, and then the product from a strategy perspective before we go into the deal, right? And that's important to us because firstly, we built our whole business on partnership because we, as a financier and a manager of developers and development, in every case, we have an execution partner, a developer that's actually doing all the technical work on the ground, of course, with our support and oversight. But it made us really understand how critical the decision of who your partner is to that equation. So for us, the first thing that we try to do with an individual who comes across our firm is to really get them intimately familiar with us as a company, our history, our track record, our investment strategy, and get people very comfortable with this platform before we start talking about deals. So I can tell you that we've had examples in the past where people learn about us through a deal, right? They see something circulating and they're like, hey, I saw that deal. Can I invest? And usually we have to kind of rewind and say, the answer is maybe. It depends on if it's not in an arrogant fashion, but it's all about suitability. It's all of whether this is a fit for what you're looking for. Because a lot of times it may look that way on the surface, but we have to get to know you first. We have to get to know what your objectives and risk tolerances are before we can match you up with the right opportunities. But that we like to rewind back to, why are you even seeking out an investment like this? Help us understand that. We'll help you understand us. And then that journey begins and we take them through that process, getting to know one another, if you will. And then we start talking about specific opportunities and how we build a portfolio for that individual.
So that's very interesting. So you've said a lot of things that I want to follow up on, of course, and I'm tapping out to try and keep up with you. So,
I talk a lot.
That's really interesting. Actually, really interesting. So you've jumped one step, but let's go to that step anyway. I'm going to ask you about that in a second. Like, what's at top of funnel? How do you drive people into your funnel? But let's get back to that one in a second. What I think you said was that before somebody invests with you, you educate them on who you are, what you do, how you do it, your investment philosophy. But what I think you said was that you have a team of people that do that. Do you use digital media to automate that process? That's kind of what I'm getting at.
Yeah. So the answer is we do. We try to cater to the preference of the individual. So, it'd be a perfect world if everybody preferred the same means of communication. You can build out one way to sort of from the funnel right down to how you ultimately engage. We can do it all. So there's individuals who find out about us online or through a friend, and they prefer to meet with somebody face to face. We have everything from that to a fully automated, come on our website, request a discussion. You get sort of a virtual avatar, if you will, that's an actual person. Like, you're not dealing with an algorithm, you're dealing with a person who's part of our capital markets team, who ultimately is perfectly comfortable and equipped to deal with clients digitally. And that whole process can be automated. Everything from learning about the investment right through to the ability to transact, in fact, and buy an investment, to put it that way. All that can be done digitally. So I would say that it's all driven by the preference of the individual. And in fact, we find that in most cases, people like some combination of the two, right? They like the convenience of being able to learn about things on their own time. Frankly, I'm like that as an individual. I like to sit there at night and say, okay, now my day's done. I've done all the things I need to do. So let me get back to thinking about that investment or learning about this different strategy. So that's how we try to cater to the way people go about their investment decisions. And that's what we've built. And I think we can kind of be very versatile about it at the end of the day. But we find that it's somewhere in the middle where people like to engage on their own terms, and they can do that digitally. But there's times even that individual will reach out and want to speak to a live person. And we don't have it's not like a call center type thing where you're getting somebody different every time. You're assigned from the minute you sort of enter our universe, you're assigned a relationship manager right off the bat. And that is your relationship manager, right? And you deal with that person and his or her team. There's somebody who's an investment professional who's there to kind of help with the investment. There's somebody who's more administratively inclined to help with paperwork and other administrative components. But that team that you're assigned is your team, and it stays that way throughout.
That's really interesting. So is the investment person an advisor? Are they investment advice? You're actually giving investment advice and figuring out what's the best for your particular investor?
Right. So one thing we try to be careful not to do is purport ourselves to be the be-all, end-all for everybody. Okay? We are experts in our chosen vertical, which is private equity real estate investment. And even within that universe, we tend to focus more on what we call opportunistic or sort of ground up development and or rental type construction. So what we do is we are experts in that area, and we can help you build a portfolio that is balanced and diversified within this subsection of the investment universe. So we're not an investment advisor in the traditional sense where I'd say, hey, Adam, let's sit down. Let me understand your objectives overall and how much you should have in stocks and bonds and where you should put all of that capital to work. We're more trying to work with those advisors and say, hey, Adam, you know what? Your advisors put a plan together for you. Some percentage of that should be allocated to alternatives. This is a great alternative, and here's how we can help round out your portfolio. So it's not a comprehensive relationship. It's a very specific relationship, but we're also very collaborative with other advisors.
And you also have a huge range of investment opportunities. Excuse me. So if somebody comes through your door, you can point them to a ground up development that's nearing maturity, I'm guessing, or a value add where there is some ongoing income. Is that how you structure it?
Yeah, generally speaking, our investments are mainly in the residential realm. And that's by design. It's not that we're afraid to get into other asset classes. We have a very deliberate thesis on why we think the stability of residential real estate is something that individual investors who have a long-term investment time horizon should generally be invested in, not unlike a pension fund or insurance company. Our investments are usually one of two type of genres. One is the ground up development, where we will look from the sort of approvals and permitting process right through to completion, whether it be an apartment building that we would then sell at the end of its completion and stabilization, or whether it's a condominium building, or whether it's a housing community. We do kind of a little bit of everything. And we have another strategy that is the value add strategy, where we would acquire an asset that we feel can be repositioned and improved. That usually has a cash flow component at the beginning, from the beginning right through. And then obviously we're hoping to generate a sort of outsized return through our value add program. So those are our two main genres. Every now and then we find a great retail property that we'd like to acquire, but I wouldn't say that is the most common. We try to kind of stay in our lane and become the best at this particular area. And the way we work with our clients is to say, look, you should have exposure to all different types of assets within real estate. We'd like to be your go-to as it relates to this specific one, which we think offers a great risk-reward relationship. And for everything else, you should engage with others. So again, it's very important for us not to overstep, and we're very very serious about maintaining people's concentration levels. And we've had clients over the course of history that we've performed very well for who say, great, I'd like to take my entire IRA and put it into your type of investment. And the answer is unfortunately not, because that's not a good idea. It's not that, we're not here to we have the good fortune of having a lot of access to capital. So it's really about creating the right strategies, the right portfolios for people. And that's our focus.
That's really interesting. Now, you are always looking for more investors, presumably. So what methodology, what techniques do you use to bring them in? So the first thing you talked about was when they contact us. So what's the step before that kind of very top of funnel? What are the different ways that you have found work the best to get people into your ecosystem?
Sure. So I'll take you back to when we first started the business 16 years ago. It was very much a relationship-driven business. So our first clients were our friends and family. Peter, my partner, and I were very young, less gray hair than you see here today. And, really at that point in time, we had to rely on our closest universe of people to say, hey, take a leap of faith. We think we have a good strategy. We think, we're competent and know what we're doing, but, we haven't done this before, so trust me. that kind of started with, people saying, kind of your parents and your uncles and your aunts and, people that are very close to you. But once we sort of evolved over time, the real first way we began to sort of build out our client base was through word of mouth. It was people who had experience with us, who had worked with us, who were saying, hey, that was great. Like, can my brother invest? Can my neighbor invest? So it really became kind of a word of mouth type thing before we started to do anything formal from a marketing and sort of awareness perspective. As we stand here today, we have kind of a variety of different ways that the clients are attracted to our ecosystem. Word of mouth is still a very big part of our business. We have an institutional group, as I mentioned, that deals directly with our clients that are either banks or other institutional investors. And then we also have really most recently started a kind of a digital advertise. I'll call it a digital awareness campaign. Like, we're not strong advertisers, nor do we want to be. It's not like we have a deal and it's like, great, let's hammer everybody with this deal online. It's more about, here's Greybrook, subtly, you kind of, whether it's Facebook, whether it's different digital methodologies, where we're trying to have people aware of our brand, and then maybe take that first step to say, let me find, these guys, I've heard of these guys, they've popped up here and there. let me take a look at their website. Let me take a look at what they do. And then from there, our digital properties are designed to be engaging and help, sort of take people through that journey from, okay, I've heard of you, I've kind of poked around your website. Hopefully there's interesting enough content that's relevant to me that now lets me start to kind of drill in, ask some questions, engage with as I said, our digital avatars, and kind of take it from there. So that's kind of today where our business comes from. It's a multitude of different things.
Fascinating. So what in the course of that evolution, the hardest part presumably was getting going and persuading friends and relatives, please invest with us. Then people started to ask you, can we invest? And since that moment, what have been the biggest challenges that you've faced in terms of recruiting? Because you must have taken another step, reached a plateau. So what have been the biggest challenges and how have you overcome them?
For sure. I mean, I think there's, if I take your question two directions, one is what are the challenges in terms of continuing to build that, investor base of interested people? Because as you point out, we do always want new investors. And a question we get a lot of the time is, well, you have a lot of investors. You have over 7,000 high net worth individuals in 30 different countries at this point. Why more? Why am I talking to you? The answer is twofold. One, I think we take some pride and pleasure in delivering what we think are high quality investment opportunities to people to help them grow their wealth. So I think that's one obvious. But the second thing is, there's strength in numbers, right? And if I, to be fair, if I sat down with you, Adam, and I said, here's a great portfolio for you and whatever your financial bandwidth is, and let's say that's $200,000. I'm just kind of picking a number. Once I've allocated appropriately for you in that $200,000, and it may take us a year to kind of layer in the right projects to build you that exposure. If all I had was 10 atoms, at some point I'm gonna limit my ability to do more. I don't want to do that, but I also don't want to come back to you and ask you to buy things that you shouldn't be buying, or overloading your exposure, or getting over concentrated because I want to do more deals. So what we're trying to do here is create the right balanced portfolio for our investors, and have enough of those investors that we can go and do more high quality deals with our partners. So from an investor perspective, I'd say one of the biggest challenges is continuing to find new investors who are qualified and interested in our strategy. To do that, and this is kind of maybe the first part of your question, which is, how do you get from your friends and family to having over, 7,000 investors in 30 countries? Really, it's about people. And I know that kind of sounds cliche, but I'd say our biggest challenge was finding, the right people that fit with our firm culturally, that have the right, sort of education and background and knowledge base within this investment strategy, and that are amenable to working in an environment like ours that's really fast-paced and fairly demanding. So finding the right people was a challenge, and still is a challenge. I think if you interviewed anybody in a growing organization, whether it's Amazon or somebody that's just starting out, I'd say that one of the biggest limitations is your human capital. And that's no different here, because we really are picky. We want to make sure that people that represent our firm, that are dealing with our clients, are of the highest quality and share a common philosophy to that of our, what we call our Greybrook DNA.
That's really interesting. And I love that you use the term DNA, because extracting your DNA is the single most important thing when it comes to communicating with investors. Wouldn't you agree?
I do. I mean, one of the things as it relates to communications, and this is probably universal when you're dealing with individual investors. Real estate development and private equity real estate can be extremely complex. And you have to take a level of complexity, and frankly, from a regulatory perspective, quite sophisticated documentation. You're offering memorandums, your SIM, your subscription agreements, like they're very legal, right? And people need to understand them. But part of our job is to help them understand this in a simple way. And it's not by any stretch saying that retail investors are simple. It's to say that retail investors are experts in whatever field they're in, whether you're a public school teacher, whether you're a a construction worker, whether you're an investment banker or a rocket scientist, you're probably really damn good at what you're doing in your own vocation. That doesn't necessarily make you an expert in real estate development. So what our job is to try to kind of come to communicate in a common language where we can take very complicated concepts and break them down into a digestible form so that people don't feel intimidated. And it can be very intimidating. So a lot of times, unfortunately, I guess fortunately or unfortunately, depending on how you look at it, the legal aspect or the regulatory aspect that comes with investing in a product like this has to be very formal, right? So people get a significant amount of information and it can be intimidating where they say, man, I don't understand this. It's a lot of legalese. It's a lot of different, documents. And we try to say, look, that's one stream and it's for your protection and you have to understand that. But let us really get to the root of helping you understand the strategy, what the investment risks are, what the investment opportunity is. And we can do that in a simple way so that it's not intimidating. And that's really what we've become very good at.
Fascinating. So you have described creating ideal, let's say this $200,000 investor and rolling out their investments over a period of time. Correct me if I'm wrong, but you don't have funds, do you? These are all individual deals. So why not? Wouldn't it be much more efficient to just put a fund together, a high risk, a medium, and a low risk fund, for example?
It would. So the answer is it would be more efficient for us. We try to look at the world, maybe it's smart, maybe it's not smart, but the way we've chosen to look at the world is to say, if I were a client, I'd like to have versatility, right? So if I raised a fund today, unless I raised a fund that had the widest parameters where I could do kind of whatever I want, however I want, whenever I want, then I could kind of attract Adam and whatever his investment objectives are. I could attract 10 other people that all have totally different objectives, but I have a very broad-based strategy that allows me to do kind of whatever I want. But when I buy that investment, what I've always thought about is how am I matching two diametrically different objectives with one investment? So what we've tried to think about is if we do it on an individual basis, we can actually tailor portfolios, right? So if you were a client of ours, you might say, okay, great, Sasha, I get it. I buy into your strategy. It's great. I'm ready to go. I've got $200,000. And the likelihood of you deploying that $200,000 inside of the first 6 months is pretty low. Inside of the first 12 or 18 months is actually probably the time horizon, because we may have 6, 7, 8, 10 deals between the time we meet and the time you're allocated. Half of those may not be right for you. So if I was just a fund, then you'd be invested in all of them with your pro rata interest. This way, I think we can be a lot more versatile and create specific portfolios and specific exposure for our clients. So it's a little less efficient if you're on our side of the equation. But we built an infrastructure from day one that can deal with that type of transactional cadence. So, it's something that we've digested and can deliver on as a firm. And I think it gives us a maximum amount of versatility when we're dealing with our clients to create very specific investment portfolios for their own personal objectives.
That's a really fascinating approach. So that really does talk to your DNA and how you started and how you evolved over time. So let me ask you another thing then, going all the way back to that first time you first started. What was it that made you decide to be an investor in other people's deals rather than investing in your own deals?
In our own, yeah. So that's a great question. I think it was twofold. One was I'm a big believer in specialization of trade. And what I mean by that is to say, if I wanted to become a developer, I'd have to spend 20 years and, all of my working life to become as good as one of the developers that I already have access to. So why would I want to duplicate what infrastructure and capability these guys already have? By taking a partnership approach to things, we can focus on the things that we're good at, which is the capitalization, the structuring, the ongoing management together with the developer. So it's not to say, and I want to make this clear to you, Adam, that we're not here just to put a financing together. We are an asset manager in the sense that when you invest your money with us, we will put it in a project with a developer, and we, together with that developer, will manage that project going forward and make sure that it completes successfully. So what you're getting is two layers of management. One is on the ground execution through the developer, and the second is that other layer of expertise that we bring to the table, which is actively making decisions together with our developer, reporting, financial discipline, running our audits, all the things that you would want to do and need or should have as an investor. So where we decided in the early days we wanted to specialize was on that layer that we think marries very well with the execution. It's sort of that bridge between the individual investor and a real estate developer. And why we decided to do that, again, is that expertise that I mentioned at the onset. I think they have it, so why duplicate it? The second reason is that we felt there was a missing component, because if you're an individual investor and you invested directly with a developer, you know, at the end of the day, if the developer is making all the decisions, as an investor, you're really beholden to that developer and their decisions. We, as the sort of middle person or asset manager, we are accountable to the investor. So when we deploy that money with the developer, we're there effectively representing the money and creating that secondary layer that should give people a little more comfort, and certainly gives them more protection in the instance of making an investment in a product like this.
So the implication of that is that you are, if not the only investor with a sponsor, you are at least a significant majority investor. Is that the right assumption?
Yeah, we're usually the only. So the way that we like to do business is to have almost a joint venture where the developer has a relationship with Greybrook. Greybrook represents its capital. So to the developer, they're dealing with one decision maker. They're dealing with one partner, if you will, in decision making, in execution, in strategy. And that's us as Greybrook. We don't have a problem being in a deal with other GPs or other limited partnership vehicles. It's our strong preference to be the only. So usually the way we approach things is the developer or sponsor will put up a share of the capital that they're accountable for. We, Greybrook and its investors, put up the balance, and there's two parties at the table.
And what is the, what is the biggest pushback that you get from investors or from new prospective investors to that kind of structure? And I have a couple in mind. I'm not going to suggest them, but
sure. So like I think the biggest pushback is the fee structure, because there's a promote structure that the developer obviously is entitled to. There's, you know, management fees, if you want to call them that we're entitled to. The vast majority of them are back-ended, so they're success fee based. Mm-hmm. We like to create an alignment in that regard. So people say, okay, great. Well, but if I invest directly, then there's not this additional layer. And my answer to people is, look, like you, and I'm not saying this because I'm on my side of the equation. This is how I invest in my personal life. Mm. Fees are there effectively if I'm getting value for them, and the work is being done, and it's either providing me with greater protection or greater maximization of my opportunity. I'm more than happy to pay them, especially if they're back-ended success fee based fees. So we like to look at this as saying, look, you're getting an additional layer, not only of oversight, but actual execution. And we're there through our structure to protect investors. So you can, you know, in many cases, you can invest directly with a sponsor, but again, you're going to be beholden to the decisions of that sponsor. And frankly, look, I know this business enough to know that there's inherent conflicts as it relates to what's good for the money and what's good for the developer, who also has their infrastructure and other considerations that they're thinking about. When you're on our side of the equation, that goes away, because the developer's infrastructure, their own considerations are of no consequence to us. We're making decisions strictly on behalf of the investor and what's good for the investor.
Yeah, it's very interesting. And I always think of real estate actually as an investor in somebody else's real estate deal as being a zero-sum game, meaning any money that the developer makes, by definition, comes from the investor side, and vice versa. It's zero sum. So any kind of negotiation, any kind of fees, any kind of promote It's zero sum, basically. So as a small investor, one of the biggest problems that you have as a small investor is you have take it or leave it contracts. You want to invest with us? Here's the you should read it. You don't need to, because we're not going to negotiate it. I mean, I'm not saying that, but that's the point. Take it or leave it.
Yeah. And I think, I'll give you a different perspective on that, which may be helpful. And I think that the way you've characterized it is generally correct, in the sense that, the zero sum game, I think, is a little less our reality, because in the game of opportunistic investing, where you're taking, effectively an input or raw material that's land, and now you're building a widget, and there's value creation through that process. I think there's, obviously, if you've aligned it appropriately, there should be a lot in it for everyone. But I think, to your point around control and sort of individual investors, there's a little bit of a quid pro quo. And the way that I look at it is to say, the reason that we don't offer control to even big investors, like we have investors that make up an entire LP for us. It might be an institution, it might be a very, sort of an ultra high net worth individual that might be, 20 or $30 million so we have literally us, one LP, and the developer, and that LP still doesn't have any more control than if you put $100,000 in. And that's always been a negotiation, because they say, well, what do you mean? I'm putting up all the money. Why don't I get a level of control? The answer is as follows. If you want to attract the best developers who have capital, right? So the reason developers work with us, or the type of developers that we work with in any case, it's not because they need money. It's because, like the way Apple accesses capital markets, I mean, they have more cash than they know what to do with, but they'll still issue bonds. They'll still do the things, because it allows them to be more efficient with their own money, and it allows them a better return on equity on their own capital. So we have partners who are very well capitalized, and if it's not the right business opportunity for them, they just use their own money. And it's not an economic deal. They look at it and say, look, if I'm getting into partnership with Adam, if Adam's not a real estate expert, and all of a sudden I'm in a JV and he has an equal say over everything we're doing, how do I put my destiny and everything I know as a developer and all the right decisions that I would make, and rely on the fact that Adam, who's an expert in whatever his vocation is, who doesn't really know much about real estate, even though he's wealthy and can put money in a deal like this, I can't make decisions with Adam, because how do I know that he's going to make the right decisions? How do I know he's not going to stop me from making a different decision that I want to make? So where Greybrook fits in, and why we need to maintain this control, is that over the course of our history and working with these developers on a repeat basis, they know that we know their business intimately. They know that we understand all of the risks, all of the different pressure points. And as such, they can rely on us to make decisions that are very much within the realm of their industry, because we have shared experience, and we have the same, sort of understanding of the business. So where they, if you were doing a deal directly with a developer, the JV might look a certain way, where you have control over very few things. In our deal, you'll have, through us, control over every single aspect of the development, because the developer knows and understands that Greybrook knows how to make these decisions. So I trust going into a 50-50 joint venture, as opposed to saying, well, I'm going to go into a joint venture, but I'm going to retain decision-making on all these critical things because you don't know anything about real estate. And I don't say that in an offensive way. It's just a question of, who we are in the equation versus some of our investors who, again, just aren't experts.
That is absolutely a fascinating perspective. And Sasha, I can't believe, I just looked at the time. I can't believe how fast we went through this. No, I'm super thrilled. I really want to talk to you more. I'm going to ask you one final question before my 3 sign-off questions, because there's one thing we simply cannot leave untouched, and that is society living. And I was in receipt of a video from your team before the podcast. It is absolutely unbelievably impressive. I wrote back, I said, I want to leave home and move into one of those places, but they look fantastic. So but check this out though. So in the context of how do you educate people, investors, how do you promote something to investors when all that's going for society living is co-living in an extremely glamorous way. For anybody that doesn't know, I do recommend you go to the Greybrook website and have a look at that, because it's absolutely fabulous what they've got going. But how do you sell that to somebody in whose mind is the only thing that's going on in their mind is today, COVID, right? I can't use any of that. So in that context, how do you deal with people's deepest, most concerns when you're trying to sell a product like real estate?
Sure. So as an investor, I think, again, when we're investing in something that we're buying today, usually in the context of society, we're leasing it up in 3 years, right? So you got to build it. You got to first get all your permits and entitlements, and then you got to build it, and then you got to start leasing it. So anything that we transact on today or since the pandemic started, your window to sort of when you start building and looking at leasing is a few years out. So you have to, again, take a long-term perspective. And notwithstanding, it's hard to look through the fog at what's happening today and all of the unfortunate circumstances surrounding the pandemic. If you believe that the world will never, ever, ever be the same, then, we're having a different discussion. If you believe that at some point in time, there will be some version of normal life, which I believe to be the case, whether it's fully normal or some slightly modified version of normal, all of the trends that existed that brought people into cities, that made cities expensive to live in, that the rental demographic and who those people are, assuming that sort of comes back to some level that was a pre-pandemic level, generally people can wrap their heads around it. So anything that we invest in today, people understand the context of the macro thesis, and they believe that, okay, in a few years, there's a pretty good chance that many of the trends we saw heading into the pandemic will be similar to the trends that we see 3 years from now. I buy that. I think it's a great investment for that reason. So to address it from an investment perspective, that's how we have to look at it. As it relates to what's happening on the ground with some of our projects that we've already invested in years ago that are now at the point where they're leasing up or people are living in them, it's been actually quite interesting, because to sit here today and say that a co-living platform would be unaffected by the pandemic would be insane. Everything's affected by the pandemic to some degree. The question is, how do you manage that, and what are the drivers and decision points for people? And I think that one thing that we try to do is to try to create as safe an environment as we can, with the right protocols, with the right sanitation, protocols and things like that. So we create as safe an environment as can be. But then also there's a reality when it comes to urban living, and that is price point. I always say that when I joke around and I say the sitcom Friends was really just adults who are living in an expensive city rooming together. That's what co-living is. All we've done is automate it and make it a lot easier from the perspective of the tenant. So what happens in the pandemic era is that people who live in cities that are prohibitively expensive, a co-living solution allows them to access an urban setting at a much cheaper price point. And in some cases, they weigh okay, it's a pretty safe environment. I've got to live with roommates anyway if I want to live in the city. So this is as good a situation as anything, because it's professionally managed. It has the right protocols, as opposed to me, relying on myself and my roommates to be doing everything. So in fact, we've been able to overcome that on the basis of preparedness, as well as on the basis of being able to deliver what I think is a fantastic urban living experience and social experience within a price point that is a lot more attractive than what would otherwise be available. So that's really the way we've dealt with COVID. And frankly, we have a lot of evidence in our portfolio, whether things are leasing up and they're in lease up, or whether they're existing stabilized assets. And we've seen a lot of stability, which goes back to the macro thesis of residential, real estate and its resilience, because at the end of the day, it's Maslow's hierarchy of needs. People need a roof over their head, whether they're living as an owner, whether they're living as a renter, they do need a place to live.
Fabulous. Maslow's hierarchy of needs. I'm going to have to look that up Because actually I had a guest on the show a while ago who would put food before that because his actually is an agriculture.
He's probably right, but shelter is pretty high up on the
Yes,
list.
it is. In fact, what is it? It's actually water. What is it? Shelter, water,
food,
fire,
shelter, and
food.
water. Yeah.
Something like that. Oh, is that Maslow's hierarchy? That's it, is it?
I believe it is.
Yeah, okay. All right, good. So I do know. I just didn't have an epithet for it. Let me ask you 3 quick fire sign-off questions, if I may, and then we'll be done.
Yep.
First, 3 questions. First question, what are your key daily habits that you have that make you successful?
I have to read a lot. Sometimes I read for pleasure, and I guess work reading is pleasure, but I definitely, a key habit of mine is I wake up in the morning, I read as much as I can, Bloomberg, other sources, not just business. You know, you got to know what's going on. If you're driving the bus on an investment strategy, a lot goes into that. It's not just about the product, it's about understanding the world and the way it's going. So that's one of them.
Second question, what's been the hardest lesson you've learned in real estate?
The hardest lesson I think I've learned in real estate is, you know, the importance of partnership. Because at the end of the day, you know, you can have all the contracts in the world, your joint venture can be as clear as the light of day, but if the person on the other end of the table just isn't a good partner, it's not going to be good. So pick the right partners.
That's an interesting answer because perhaps, and I don't want to put that answer into your mouth on the third question, but here's my third question. I'm guessing it's probably similar. What's the most important thing somebody's thinking about, high net worth individual who has not invested in real estate before? What should they keep in mind as they look for investment opportunities in real estate?
Yeah, you know what? You're right. You called it. It's going to be a similar answer, which is you gotta know who you're investing with, especially in a strategy where you're passive, right? Like we just pointed out in our earlier discussion, we make the decisions. So while it's great for you to understand the deal and the piece of property, and please get as comfortable as you can and want with that, before you even go there, diligence the partners. Who are they? Where do they come from? What have they done? What is their track record? Are they regulated? Make that decision first, because at the end of the day, that's going to determine the outcome of your investment 100% of the time.
Fantastic. I'm going to sign off now. Don't go away because I've got one off mic question for you. But Sasha Cucuz, CEO, correct, of Greybrook Securities. Thank you so much for being on my podcast.
Thanks for having me.
That was Sasha Cucuz, CEO, Greybrook Securities and partner at Greybrook Capital. Now, in addition to all the resources that you can find at gowercrowd.com, keep an eye out for a new book that I'm about to publish for developers that gets into the DNA of exactly how to raise money online. And as it's not quite ready for prime time yet, please go ahead and sign up for the newsletter there on gowercrowd.com. Sign up as a developer and I will get you more information as soon as it becomes available. And of course, if you'd like to learn more about Greybrook, just go to the podcast page for today's episode and you'll find a host of links there at the bottom of that page. That's it. Thanks for listening and thank you, Sasha Cucuz, CEO, Greybrook Securities and partner at Greybrook Capital, for your time with me today. It was a pleasure to meet you and to talk with you, and I've been really enjoying all the communication with your entire team. Thanks so much for giving me the chance to talk to them. They're a great crew, right? That's it. And that's all for this episode. I'll see you next time. And in the meantime, stay well. And for now, this is Dr. Adam Gower signing off.